Imagine waking up, opening your trading app, and seeing a Trump-backed stock suddenly crash more than 50%, only to bounce, freeze, drop again, and get halted multiple times in a single afternoon. That's exactly what happened as DJT, the stock tied to Trump Media and Technology Group, was slammed with extreme volatility, triggering several trading halts that left investors confused, shocked, and asking one big question. Is this real market activity, or are we witnessing something that looks a lot like manipulation? In today's video, we're breaking down what really caused the sudden collapse, why DJT stock behaves unlike most public companies, and what these repeated trading halts actually reveal about risk, speculation, and the future of political-linked stocks. And if you appreciate straightforward finance content without the hype, make sure to subscribe. It helps the channel more than you think. Let's get into it. First, here's what triggered the chaos. Shortly after the market opened, DJT stock began to slide. At first, it looked like a normal pullback after a strong run. But then the selling pressure accelerated. Within minutes, DJT hit the circuit breaker limit required by the exchange, forcing an automatic pause. The stock reopened, dropped again, and immediately hit another halt. And this didn't happen once or twice. It happened repeatedly throughout the day. If you're newer to trading, a halt is supposed to protect investors from disorderly market conditions. The exchange steps in, freezes trading for a few minutes, and gives the market time to cool down. But when you see multiple halts within the same hour, it signals something more serious. Unusual order flow, extreme speculation, or concentrated selling that overwhelms normal trading activity. The big question is, why DJT? Why does this particular stock move so violently, so often, and in ways that look less like a traditional company and more like a meme stock? The answer is a combination of low float, political hype, and investor behavior. The number of shares actually available to trade is limited, which means even relatively small buy or sell orders can cause exaggerated price swings. Add the fact that it's connected to a major political figure, and every headline, court update, interview, or social media moment instantly becomes fuel for speculation. In other words, DJT trades less like a business and more like a political sentiment index. But this latest crash raised deeper concerns. Before the drop, DJT had already been on a high-volatility streak. Big price surges were followed by sudden collapses, often during low-volume hours when liquidity was thin. Some analysts have pointed out that these patterns resemble pump-and-dump-like behavior, not because the company itself is necessarily orchestrating anything, but because the surrounding hype attracts speculative traders looking to profit off retail excitement. When a stock becomes a battleground between hype-driven buying and aggressive short selling, halts become almost unavoidable. One of the most interesting things about this event is how unprepared many retail traders were. Social media was flooded with reactions. People frozen out of their positions, traders unable to place sell orders, and long-term holders confused about why the chart was stopping and starting every few minutes. That's one of the hidden dangers of politically connected stocks. They carry emotional weight, and emotional stocks often move irrationally. But let's talk about the part that most people are missing: the long-term implications. Multiple halts in a single session is not just a technical issue. It damages investor confidence. It tells institutional money that this is not a stable environment to allocate capital. It signals to regulators that something is happening behind the scenes, whether it's social media-driven speculation, coordinated behavior, or simply an extremely fragile trading structure. And when investor confidence drops, liquidity drops with it. That means even bigger swings in the future. That we've seen this movie before. GameStop, AMC, Bed Bath & Beyond, even crypto tokens that move more on sentiment than fundamentals. DJT is now part of that group, not because of its business model, but because of the nature of the attention around it. When a stock's identity becomes tied to a public figure, it stops trading like a company and starts trading like a cultural moment. Still, there's another angle. Speculation can be incredibly profitable for traders who know what they're doing. High-volatility stocks create massive opportunities, but they also destroy portfolios just as quickly. Plenty of people made money on the bounce, but many more were caught holding during the plunge. So where does DJT go from here? Short term, expect continued turbulence. Halts tend to cluster. Once a stock becomes unstable, it takes time for order books to normalize. Long term, the stock's trajectory will likely depend on fundamentals, user growth, revenues, and regulatory clarity. But right now, fundamentals are not what's driving price action. Sentiment is. Ultimately, whether you're bullish or bearish, this latest crash is a reminder of something every trader needs to understand. The market doesn't care about political loyalty, personal emotions, or viral narratives. It reacts to liquidity, volume, and money. And when money moves fast, stocks move faster. Before we wrap up, here's the takeaway. DJT is not your typical investment. It's a high-volatility, high-risk ticker surrounded by hype, headlines, and speculation. If you trade it with a strategy. If you invest in it, invest with your eyes open. And if you're watching from the sidelines, consider it a real-time lesson in how markets behave when emotion and politics collide. If you found this breakdown helpful, make sure to like the video and subscribe. It keeps the channel growing and helps us bring you more fact-based finance content without the noise. Thanks for watching, and I'll see you in the next one.